Welcome back to Dejan's Journal, your no hype, no BS source for daily crypto news. If you missed the noise today, we got you covered. Here are the 5 biggest crypto stories shaking the market right now. Headlines: Bitcoin's hash rate just saw its steepest drop in 3 years. What's going on? The BIS says stablecoins fail as money and wants them strictly limited. Fuzzland reveals that an insider caused the $2 million Bedrock UniBTC hack. Bitcoin ETFs see $588 million inflows, the biggest daily inflow in June. SharpLink Gaming stock jumps after adding $30 million more. Story 1. Bitcoin hashrate drops 15%, steepest fall since 2021. Bitcoin's hashrate, the total computational power securing the blockchain, has dropped more than 15% since the 15th of June, plunging from nearly 944 EHS to just 800 EHS. According to blockchain.com, this marks the sharpest decline in hashrate since mid-2021, when China's mining ban triggered a mass exodus of miners. So, what's driving this sudden drop? Analysts are pointing to a mix of seasonal weather disruptions and energy curtailments in key mining hubs. In Texas, where many US-based miners operate, extreme heat has led to rolling blackouts and forced shutdowns to reduce pressure on the grid. Similarly, in Sichuan, China, historically a major mining region, the rainy season has brought unpredictable hydropower supply, affecting uptime. There's also growing speculation that large industrial mining operations are relocating equipment or migrating hash power in response to changing energy economics and regulatory pressures. Some firms may even be preemptively scaling down as Bitcoin price volatility threatens profitability. But why does this matter? A sudden hash rate drop has 2 key implications. First, it can create short-term network vulnerability, as fewer nodes process transactions and secure the blockchain. Second, it signals that mining margins are under stress, especially for firms with higher electricity costs or less efficient hardware. If price doesn't recover or energy costs don't stabilize, we could see further consolidation in the mining industry, with smaller players capitulating and large firms dominating. For investors and builders, monitoring hash rate is a key way to gauge the network's health and where the macro tide might be turning. Story 2. BIS. Stablecoins fail as money, demand strict limits. In its 2025 annual economic report, the Bank for International Settlements, BIS, often called the central bank of central banks, issued its most critical stance yet on stablecoins. According to the report, stablecoins fail the foundational principles required to qualify as real money in a modern financial system. The 3 tests: singleness, elasticity, and integrity. Singleness refers to whether an asset trades one-to-one against all forms of money without conversion risk. Elasticity means the system can scale supply to meet demand. Integrity points to resilience against financial crime, systemic risks, and manipulation. The BIS argues that stablecoins fail on all 3 fronts. Because stablecoins are privately issued, they often trade at variable rates, especially during liquidity shocks. They lack the universal acceptance and, at par, guarantee that state-issued currency offers. Most importantly, the BIS warns that stablecoins introduce new vectors for financial crime, regulatory arbitrage, and even threats to monetary sovereignty if they grow too large or go unregulated. The report emphasizes that stablecoins are digital bearer instruments, more like securities or money market funds than actual cash. The BIS called for strict legal limits on their use in core financial systems, a move that could influence upcoming legislation, such as the Genius Act in the US, and reshape how regulators approach private digital assets. This stance could have massive implications for companies like Circle and Tether, and for DeFi platforms that rely on stablecoins as core liquidity. The message is clear: central banks are pushing back, and stablecoins may soon face an entirely new regulatory regime. Story 3. $2 million. Bedrock hack was an inside job, Fuzzland confirms. In a rare move of radical transparency, smart contract auditing firm Fuzzland has officially confirmed that the $2 million exploit targeting the Bedrock UniBTC protocol in 2024 was orchestrated by one of their own former employees. According to the internal report, the attacker leveraged a combination of insider access, sophisticated malware, and social engineering tactics to infiltrate sensitive systems. The individual inserted malicious code into engineering workstations, creating undetected backdoors that remained live for weeks, quietly siphoning privileged data. The most chilling detail? The vulnerability that enabled the exploit had already been discovered internally, but was deprioritized after being flagged as a false positive in routine scanning. That gave the insider just enough time to strike before any patch could be developed. The breach wasn't random or opportunistic. The attacker used information from an internal emergency call where the bug had been discussed to launch the exploit with surgical precision. This isn't just another DeFi hack, it's a wake-up call for the entire Web3 industry. It underscores how traditional cybersecurity risks, like insider threats and supply chain attacks, are colliding with smart contract vulnerabilities to create new attack surfaces. As DeFi matures, security is no longer just about auditing code, it's about building resilient human processes, monitoring internal communications, and accepting that some of the biggest risks may come from within. Story 4. Bitcoin ETFs see $588 million inflows in one day. Institutions are back. Institutional money is making a comeback, and it's choosing Bitcoin. On Tuesday, US-based spot Bitcoin ETFs logged $588.6 million in daily inflows, the highest single-day total for June, and the 11th consecutive day of net positive flows. That marks the longest inflow streak since December 2024, according to Farside investors. Leading the charge is BlackRock's iShares Bitcoin Trust, IBIT, with a whopping $436.3 million in inflows, followed by Fidelity's FBTC, which attracted $217.6 million. Even smaller players like Bitwise and VanEck posted modest gains. Meanwhile, the once dominant Grayscale Bitcoin Trust, GBTC, continues its trend of capital outflows, shedding another $85.2 million, reflecting investors' preference for lower fee, more efficient ETF structures. Since the 10th of June, total ETF inflows have surpassed $2.2 billion, a powerful signal that institutional players are rotating capital back into Bitcoin after weeks of risk-off sentiment driven by macro uncertainty and geopolitical tensions. What's driving this surge? Analysts point to a combination of factors: receding geopolitical fears, anticipation of the Fed's policy pivot, and Bitcoin's price resilience near the $100K range. This wave of institutional demand isn't just about price speculation, it's about asset allocation at scale. Bitcoin is increasingly being viewed not just as a hedge, but as a core treasury asset with long-term potential. As the ETF narrative continues to evolve, expect Bitcoin's legitimacy among traditional financial institutions to deepen and its volatility to be absorbed by a growing wall of professional capital. Story 5. SharpLink buys $30 million in ETH. Stock pops 7%. SharpLink Gaming just made another massive bet on Ethereum, and this time, the markets are paying attention. The company revealed it had purchased an additional 12,207 ETH, worth roughly $30 million during the week, ending the 20th of June, bringing its total Ethereum holdings to 188,000 ETH, valued at over $457 million at current prices. That makes SharpLink the largest publicly traded holder of ETH in the world, surpassing even some major crypto-native firms. But it's not just about buying and holding. SharpLink has staked its entire Ethereum treasury, turning its ETH into a yield-generating asset. So far, the staking operation has already produced over 120 ETH in passive rewards equivalent to nearly $293,000, all without selling a single token. Why is this so significant? Because SharpLink is not a crypto company in origin, it's a sports betting and gaming firm. This level of commitment to Ethereum signals a seismic shift in how traditional companies are thinking about digital assets. They're not just diversifying into crypto, they're building long-term treasury strategies around it. At the center of this strategy is Joseph Lubin, SharpLink's new board chairman and one of Ethereum's original co-founders. Lubin has described ETH as a core driver of long-term shareholder value, And his presence on the board suggests this is more than just a speculative trade, it's a structural investment. The market clearly liked what it heard. SharpLink stock jumped 7% following the announcement, a rare show of investor enthusiasm in a macro environment still wary of risk assets. This isn't SharpLink's first big move either. Back in May, the company raised $425 million for its ETH accumulation plan and bought $463 million worth of Ethereum in a single swoop. Now, with continued purchases and an aggressive staking policy, SharpLink is positioning itself not just as a betting platform, but as a crypto treasury powerhouse. The question now is whether other public companies will follow SharpLink's lead, and whether Ethereum, long overshadowed by Bitcoin in corporate balance sheets, is about to enter its own institutional era. Which story do you think will have the biggest long-term impact? The hashrate crash, Biz slamming stablecoins, or SharpLink going full ETH maxi? Let us know in the comments. And if you're finding value in these daily rundowns, don't forget to like, subscribe, and hit the bell so you never miss the real stories that matter in crypto. This is Dejan's Journal. We don't do hype, we do signal. See you in the next one.